Okay, so we made bold claims in Q1. We talked about where we expect the markets to go. We called out specific asset classes and we said, okay, this is the direction we expect it to go. And it's time to find out if we actually nailed it or if it was a complete disaster. So I will start with the gold, which in my opinion, gold is currently king. Yeah. So I will start with gold. And we initially, when we started the year, into the year, we're talking about gold making higher prices, right? We're calling for higher prices, and briefly, I'm going to give you why. We talked about that in the former video, so you could go well to check it out. So, briefly, we talked about gold being a safe haven, and in terms of uncertainty, especially with tariffs, we expect the gold market to actually rally as a safe haven. Also, gold as a safe haven, well, as an inflationary hedge, rather. We expected as tariffs was coming in and inflation keeps increasing in the US, investors will look to hedge and protect their portfolio and their funds using the gold. Gold was ideally the best bet for the year, and we kept calling it. And if you were following us, you would have had opportunity to partake of it. There were multiple entries on the gold. We see that one of the ways actually to enter a trending market is to wait for the market to do what we call a false breakout in the opposite direction. And gold normally likes to do things like that. There were so many opportunities when the market dropped down below a particular low, reversed back into the range, gave multiple opportunities for entry. Here's one where you could have taken advantage of if you were paying attention. Another place also here, you could see that clearly, market actually dropped below that low. And it's also another level where you could have taken advantage of buying the gold. From an investor's perspective, you could have held from January. From a trader's perspective, you could have entered on false breakout and on the lower time frame where you see a market structure shift. And we talk a lot about that in our former video. So yes, gold is one of the assets we called for the year, and we clearly nailed it. So this is one for us. So let's check out the others. We specifically also talked about the Canadian yen. So we mentioned the Canadian yen, and again, briefly, I'll just quickly go through it. One of the reasons we're calling for higher prices on the Canadian yen was because at the beginning of the year, Canada was in the forefront of tariffs. I mean, now it's China and all that, but Canada was at the forefront of the tariffs. They were at the receiving end, and then the Japanese yen from December into January, we're talking about calling for higher rates to protect inflation. So yen was stronger. Canada was expected to be weaker because of the tariffs and all that. And yes, again, another win for us into the first quarter. Towards the end of the first quarter, Canada phenomenally playing according to script. One of the ways you enter a market when it starts to trend, especially on the higher time frame, is to wait for retracement. When the market is trending downwards, you wait for retracement where the market does a corrective move and retraces into discount where you measure with your fib from the high to the low. Anything above the 50% is a premium level, sorry. Anything above the 50% is premium. You want to be selling at premium. And this asset actually gave us multiple opportunities for that. You could also see where it does a lot of false breakout. Also something I mentioned in the gold. These are opportunities for you to enter, and these are places or levels where people actually took advantage of. And on the floor, it was a win again for us. When the market takes out the high, does a false breakout, we look to enter from this high to this low relative to this swing. This is discount. Let me quickly pull the fib and show you, because anything at premium is where we want, this low is where we want to be selling from. So Canadian yen is also another asset that played according to script. That's another win for us on the floor. We called also another asset. Specifically, we mentioned the NASDAQ, but generally, I was talking about the entire stock market. We are calling out for lower prices when the stock market was actually still up. And this is because in uncertain times, as of the way the president was making, the president of the US was talking about tariffs and just imposing here and there, the stock market does not like that level of uncertainty. And for the NASDAQ, we see a sell-off on the NASDAQ into the first quarter of the year, exactly as we said it. it did hold up a little, and this gave more opportunities for, okay, we expect short, and exactly the same way you want to enter when the market starts to trend to the downside. Now, if you're an investor and you're locked in from January into February, you're good. But if you're a trader, you're looking for opportunities where the market actually retraces and gives room for entries. All right. So we also made mention of the yen basket, which is the overall measure of the performance of the Japanese yen against specific asset classes. So we mentioned the yen basket, and I specifically started to call for higher prices, yes, for the yen basket overall. And this is because we see that the Bank of Japan and many members of the Bank of Japan were calling for rate hikes. Let's hike rates because they were trying to control inflation from December into January. Of course, now not the case, but yes, this was exactly what they were calling for, and this is clearly what we see in the yen basket. I mean, totally another win for us on the floor. And also, we made mention of the fact that we expect to see Fed funds rate stay unchanged because earlier into the year, we see that the Feds were the only central banks that were holding back on cutting interest rate. And we actually see other central banks, because we moved into a cutting cycle, and I mentioned that slashing interest rate, but the Feds refused to slash interest rate early into the year because they were also watching inflation. And this is one of the reasons why um, the dollar, we expected higher prices for the dollar. So this is the asset where took us, I wouldn't say we're taken unaware because the news about tariffs came up. We expected higher prices going into the year, but when tariffs came in and the uncertainty set in, we decided to stay back. And this is exactly what we see in the dollar. The dollar index was something we expected to move higher when we started the year, but when tariffs came in, we started to call for lower prices, but we deliberately avoided it because of the whole uncertainty. So now think about this. If you were with us from the beginning of the year, this had the potential to increase your entire portfolio with 50% just moving into the first quarter. This is something you do not want to miss moving forward. Now, the remaining part of the year, we'll also be calling specific asset classes and where we expect them to go. We'll be doing this in our May 31st finance conference. So our finance conference that is coming up, we expect to see you there. So come May 31st, we'll talk about the economy and how to navigate your way through the uncertainty in tariffs and how to better position yourself for better opportunities. So cheers, and I will see you there.